Hello and welcome to Business Today Television. I am Siddharth Zarabi from the World Economic Forum here at Davos, Switzerland, and with me, Mr. Dinesh Kumar Khara, the chairman of the State Bank of India. Mr. Khara, welcome. It's a better day. The sun is out and you can see the snow and the trees behind us. But as we discuss the state of banking in India, before I get to that, I want you to tell our viewers about what do you see as the state of the global economy. Two reports prior to our conversation that have come out, both say that a majority of the CEOs expect a recession, especially in the advanced economies. What's your own sense after meeting so many people?
Yeah, my assessment while engaging with various CEOs across the globe is that recession might hit some of the parts of the globe, and particularly it might be there for the first half of the calendar year 23. But there are very strong sense of reflection which I am getting from all the CEOs is that the second half going to be quite robust. So which means that the major part of the global economy, like the USA, for instance, might get into some kind of a shallow recession in the first half of financial year, of this calendar year 23. But thereafter they will be back in action. So this is, I would say, it is quite a promising situation. And as far as the Europe is also concerned, even there also, the sense which I am getting about Germany in particular is quite encouraging.
Oh, really?
As compared to what
many people say that Europe is the weak man of the global economy.
Yes, but it is not really so. Germany seems to be doing well. They seems to be getting over the issues relating to energy security, etc. But they seems to be thriving well. So I think to that extent, it's going to be a very encouraging scenario when even part of the, some of the countries from Europe will also look up, and even US also will be through with the shallow recession, and thereafter there's going to be a strong rebound as far as the US economy is concerned.
What will this rebound in the advanced economies mean for our country, which is expected to grow between 6.5 to 7%?
I think it actually augurs very well, because when it comes to the domestic demand in the economy, it's quite encouraging. Last quarter we have seen that demand was as strong as about 10% plus growth was seen for the quarter ending September, and I expect the similar trend to be there for the quarter ending December as well, and as far as the Indian economy is concerned. So I think our domestic lever is doing pretty well, and the export was only, we were facing some sluggishness on account of the recession fears and the slowdown which was seen in the developed markets. So I think once the economies in the advanced economies also look up, our export lever will also see a positive traction. So to that extent, I would say it will go in favor of India.
What about inflation? The globe has seen unprecedented inflation. We also saw inflation which was more supply side. Some of it seems to have been controlled. Do you think the worst of inflation in India is behind us now?
See, when we look at inflation, we have almost come down by about 200 basis points as compared to the peak of the inflation which we saw in the country. So I would say that the supply side constraints which are there essentially on account of the contact heavy industries, contact intensive industries, we are seeing that there is a very strong demand coming from the hoteling industry, from aviation, etc. And apart from that, even the agri production also is quite encouraging. So I think all this has got an impact, and the agri production particularly would have an impact on the CPI. So I expect that the inflation scenario also, leave aside the imported inflation which we have on account of the crude prices, even that also we might see some kind of a better traction, and because we are increasingly going towards the renewable energy which will reduce our import bill in due course. But of course there is a very conscious effort on the part of the economy to de-risk itself from as far as the crude import inflation is concerned.
And we've managed to control the pass-through of the crude volatility by a physical support measure for our oil marketing companies, almost 20,000 crore and plus. But let's also talk about one other big theme that we have seen in the last several months, practically for the whole of 2020 And we here in Business Today TV at the India Today Group call it the big banking turnaround. Public sector banks back in favor and the flavor of the season. Is this yet another instance where I should ask you that the worst seems to be behind and now as public sector banking and overall banking in India is fully on track?
Yeah, I think post the global financial crisis in the year 2008 and also the AQR related issues which were there in the year 2014, the banking sector in general have understood the lessons which were there, and to that extent they have significantly strengthened their risk management practices. That having said, so they are very mindful in terms of the underwriting, they are very mindful in terms of the control and follow-up of the loan book, and also they have provided very well. They have identified the stress and they have provided for that stress. And to that extent, I would say that the public sector bank's balance sheet is quite robust now. And apart from that, the recapitalization which has happened over the past couple of years, that has also helped them to really ensure that there is enough growth capital available to support the growth ambitions of the economy. So I think overall I would say that the provision coverage ratio for the system as a whole at about 71% plus, and also the capitalization being very strong, they are very well placed to support the growth of the economy.
The same point really for SBI, if you could give us a quick sort of overview.
Yeah, we have significantly strengthened our risk management practices. We came out with in fact, risk review department, which is actually evaluating each of the proposal and thereafter giving their inputs to the credit committees. So that has helped us in terms of ensuring that our portfolio quality index keeps on improving, and that is something which we monitor on an ongoing basis. And apart from that, our own the PCR also, when it comes to the corporate book, it would be actually 80% plus.
Okay.
So to that extent, I would say that we are very well placed when it comes to our provision coverage ratio, when it comes to our underwriting, when it comes to our control and follow-up of our advances. We very closely monitor even our SMAs on an ongoing basis. We have become a very significant retail book, so we ensure that the pre-delinquencies calls are there. And all this has led to a situation where our retail book actually has got around 0.5% of the GNPA, which is, I think, perhaps the best in the retail lending sector. And I think when it comes to our corporate credit cost, it is also, we are seeing that for past, in fact in the last quarter we saw that it was less than 100 basis point, and I hope that we will be in a position to demonstrate even much better quality of assets going forward as well. So this is what my assessment is.
Banks are seeing, like you say, a good uptick in credit growth. The question that is being asked is this sustainable? Because there is some softness that is expected in the next few months.
Yeah, when it comes to the second quarter, we witnessed a credit growth of about 20-21%. That was also partly attributed to the base effect. But having said that, I would also like to mention that there are multiple growth levers which have now come in action. For instance, renewable is one of the major growth levers. EVs are the other growth levers which have come into, and we are seeing good traction of the loan proposals for this particular sector also. So I think infrastructure, renewable and EVs and these kind of opportunities, apart from the consumer loan book, which we have seen a very decent growth for past couple of years. It is actually now compounded annual growth rate of almost about 16% plus in the retail book. So I think I expect that it may not be as high as about 20-21%, but certainly it would be somewhere around 16 to 18% kind of a range. This is what I expect, but much of it will be the function of the real economy. But nevertheless, my expectation is that about 14 to 16% of the loan book growth is likely to be seen for some time to come in the future.
Some time to come in the future. Has the higher rate of interest also impacted growth?
I would say that so long as there is a visibility of demand, it is not really the higher interest rate which is going to impact the demand for the credit.
Okay. What about deposit growth?
Deposit growth, of course, we did see that it was not matching up with the kind of a credit growth which we saw. But I would say that I think going forward, as the credit book growth tapers down, perhaps it will be, it will take care of the. In fact, the deposit book growth will take care of supporting the loan book growth. But nevertheless, for a bank like us, we had invested. We always perceived deposit as a franchise. So during the period of COVID, when there was not enough demand for the credit, we continued to raise the deposit, and we have now in a better position in the sense that we have got excess SLR which is available with us, and we need not go overboard in terms of the interest rate which we offer to the for the deposit. But nevertheless, as I mentioned, that we are cognizant of the fact that deposit is a franchise and we must take care of the depositors' interest pretty well. So that is something which we are doing, and I expect that this kind of a war chest which we created in terms of the excess SLR, that will help us in ensuring decent NIMs going forward also.
India is still by some ways a fixed deposit country if you do a comparison, and I don't know if there are some viewers who have heard you and who might feel, oh, there goes our chance for higher.
No, we have already increased the fixed deposit rate. Incidentally, if I may come in here, almost about 87% of the loan book is supported by the deposits, and when we look at about 44%, 45% is a CASA out of that. So the fixed deposit is comprising of about 43%. So that's how it is actually stacked up.
That's a very solid number.
Yeah.
Let's also, since we're talking about rates, the 225 basis point increase by the Reserve Bank to combat inflation, and you pointed out at this beginning of the conversation about the 200 basis points fall in inflation. Would it be fair to assume that we are now headed for a pause in interest rates and perhaps down the line a few quarters a cut also?
I would say that as far as the inflation trajectory is concerned, we seem to be doing well, but when it comes to the global inflation, there are chances that Fed might increase the interest rate, and we expect that if at all that is followed by the central bank of the country, then perhaps there could be another increase of over 25 basis point. But thereafter, I expect that there should be pause as far as the policy rate increases are concerned.
So, if I was a home loan borrower, what would you advise me?
I think as far as the home loan borrowers are concerned, since the loan period is pretty long, so I think 15-20 basis point does not really make a difference. It is actually the felt need for the home, which is very material. And in any case, the home loans are linked to the external benchmark. If it is going up today and if it comes down tomorrow, then of course they will be the beneficiary. So overall, when we look at about 7 to 10 years or maybe plus, it actually gets evened out.
Absolutely, and there's an opportunity cost. You can't base your decision only on a 15, 20, 30 basis point shift in the rate that you're paying on your EMI. Since we are in the Davos and a global context, India is expected to become a $7 trillion economy over the next 6-7 years. It's very clear that the banking sector will have to drive that, and that's what you and so many other banks in India have been doing. A point that has always kept being discussed in the past, India and a global sized bank. What's your view on that? For example, the State Bank of India itself, do you see yourself being a global sized bank?
See, actually, when we look at the global sized bank, a very important component is that what is the denomination of the currency in which their balance sheets are being evaluated. So today, though we are from the weak currency area, but we still hold a position in the global banks. If at all our currency becomes stronger, I think perhaps our incremental improvement in the league table will be significantly stronger. So having said that, I would also like to mention that if at all we will go by the purchasing power parity, and then we will probably rank these banks, our position will be very strong. among the league of the international banks. So
That's a very good point, because sometimes people forget that even if you were converting India's GDP into a dollar value, you can't do a point exchange rate. You have to do the average of the whole year's exchange rate, and big fluctuations happen as a result. Mr. Khara, as we wind down the conversation, I'm going back to an earlier point that we discussed, the big banking turnaround. One of the reasons for the turnaround has been the Insolvency and Bankruptcy Code. I have two questions. The first one, is the code stuck in the sort of judicial maze or the legal maze? Several deals, even post-acquisition, are stuck. The banks like yourself have even received the money, but we have the acquirer waiting to get final legal approval. Is that a worry?
well, I would say that when it comes to, if we look around the globe and the kind of time which it has taken for many other advanced economies for adopting any of the insolvency laws, the time taken is much longer. It came into existence somewhere in the end of the 2016 over here in the country, and we have already seen that when it comes to the past laws which were in vogue at the material point of time, like the BFR, etc., the recovery is much better. And on the top of it, it has also led to the creation of an ecosystem, which was not there in the past. So I think, though it is still, I would say it is much in evolution as of now, because based on various judgments which are coming in, the law is adopting all those judgments also, and improving it also as well. So I think I would say that since it's more of a journey, it's not a destination as of now, and the kind of results which you have seen as a result of this insolvency law, it is quite encouraging. For instance, very often, and also we have to keep in mind, the recoveries have to be compared in terms of the options which are available with the system. So I would say that as compared to the options which are available to the system, the recoveries, thanks to the ecosystem which has got created, recoveries are better than what it was in the past enactments or the laws which are there in vogue. So I would say that I'm still very hopeful, though at times it causes a bit of frustration, but nevertheless I would say that it is all in the right direction.
It's all in the right direction, and that's the consensus so far that I've heard from Davos and from Mr. Khara and so many other top CEOs that we've been talking to, that the direction for the Indian economy is only upwards. Mr. Khara, thank you very much for your time with us today.
Thanks a lot.
That was the Chairman of the State Bank of India. We're wrapping up this conversation. We'll be back with more. Do stay with us.